Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having a great day. Today's video is going to be answering a question from someone in the comment section, obviously, who was asking, how do I find a good company to invest in? What DYOR, do your own research, should people be doing to find a good company to be able to invest in? I think in some other video I must have mentioned find a good company to invest in and kind of moved on but did not explain myself. So I'm going to explain in this video exactly what I meant. One of the easiest places for you to be able to look is on Yahoo Finance. I know that Yahoo is not very big in many other countries as it once was in the late 90s, early 2000s, but it is still very large, especially when it comes to finance. On Yahoo Finance, you can actually find the information for many different companies, nearly every single company that's on every single stock market, and you can pretty much have a history rundown of that company. And I'm going to explain exactly what that means in a couple of seconds. On Yahoo Finance, you'll be able to find the company's history and also look for their public appeal. The list is kind of all over the place, but everything comes together into one big answer, if you will. When you look at the company's history, you want to look at just about everything that they've done. And yes, as far as you want to be aiming, first of all, for major companies. If you decide in your quest to make money in the stock market that you want to go for smaller cap companies, brand new companies, that is entirely up to you. I would, however, recommend to go for larger companies. And companies that make sure to, or have been able to show their actual usefulness to the public, i.e., is this company that you're thinking about investing in selling diapers, baby formula, shoes, clothing, or are they selling fidget spinners? It's a very big difference. One of them is going to be around for a lot longer, while the other one was a trend in a summer, what was it, like 2 years ago? Remember the little fidget spinners that everyone had? There's still stores around me that still sell fidget spinners outside, and they're selling them for like 50 cents because nobody wants to buy them. You want to look for how long has a company been around. It is usually not the most important metric. However, you want to make sure that you are investing in a company that is at least 15 to 20 years old, if not older. It gives you a very good idea. Usually, if you can aim for a company that's around 60 years old, it's great because it shows you how long the company has been around. They've stood the test of time. Most companies usually falter after a year, 3 years, roughly somewhere within that time frame. So if you have a company that's been around for 15 years, you can see their price action. You can see how many people have actually been into said stock, how many times it's crashed, if it's recovered during the crashes. If you have a company that's been around for 50, 60, 70 odd years, and you see that during all the crashes, they've continued to recover and continue to go up over this course of time, they are probably a very strong company for you to be able to put your money into. You want to look into their dividend history as well. You'll be able to see this on Yahoo Finance and many other places. I'm pretty sure Yahoo Finance is not the only place where you'll be able to get this information. However, the dividend history is very important, as many people have been asking me on this channel, and kind of I guess the point also of this channel is also like a passive income kind of channel thing. You want to see that they have a steady dividend growth and have had consistent returns for their investors. Usually a red flag is if a company has a 25% dividend one year and then a 3% the next year and then a 16% the next year. It's kind of all over the place. You want to look for a company that started out with a 1% dividend, went up to 1.25, 1.35, and now are roughly around, after being around for about 30 years, have anywhere between a 3 to 5 to 6% dividend. Of course, some of them may be higher. This is usually the number that I tell people to get into if they're getting into stocks. I myself am not the current owner of stocks. However, I do plan on buying some in the future. Once my other investments, I'm done with them. I don't know how to really say that in some other way, but this is a healthy number that you should be looking for. Try to not get into companies. The point is, any major company that you're going to be getting into, a major company, a big, huge conglomerate company, will probably have between a 3 to 6% dividend return for you, and they won't have those other wacky numbers in the first place. Look for well-known companies that are selling everyday items. This is also very important. The same exact thing with the fidget spinners. Look for companies that are selling soap, tissues, bleach, food brands. Things that are recognizable household names that they've been in your household since you were a child and when your parents were kids. These are usually the most steady. A lot of people sometimes tend to try, and don't let me discourage you from doing this, but a lot of people do try to capture or find companies that have been around for about 5 or 6 years, that have a lot of hype surrounding them, thinking that eventually I'm getting in early enough that I'll be able to ride that wave all the way to the top, and in 30 years be able to tell other people, well, look what I got into, why didn't you get into that? These are very risky. People remember the company when they first come out. They remember them for the hype that everyone else has gotten into them, but they never remember the company 10 years later when the company died somewhere after it came into life. I don't know if I'm stressing this enough for everyone. Try to stay away from hype. If you're looking for like a really good companies have a solid infrastructure, have a great dividend history, and I'm pretty sure I have this on here as well, don't have a lot of controversial things that have happened to them. How many times did they try to have a corporate takeover within their own ranks? How many other people were backstabbing other people? How many times was this company sued? You have to look into all these things as well. Just because you want to make sure that you're putting your money into a proper place where you stand to make more money, because a lot of stuff happens behind the scenes to just make sure that your money's kind of safe. Company that shows longevity, that shows the potential for future growth. You can also find these metrics as well on other different websites. I'm not sure if they have them on Yahoo Finance, but you can even Google like websites similar to Yahoo Finance and you'll definitely find them. A lot of times they'll talk about the future potential of a company and where they see it going over the next couple of years. You have to understand, when people are investing in these things, they're investing for the long term. They're not investing in, I can't say the name of any company. They're not investing in these companies for the idea that maybe in 2 years they'll perform well. No, it's like, how are they going to do over the next 5 years? How will they do over the next 10 years based on current projections and how they've also been doing before in the past? Look for stuff that shows like it's going to be lasting for a very long time. And once again, a good criteria is that if you have them in your home, everyone else you know has them in your home. Look at the little tags on the back, which companies are making them. Check and see if they're in the stock market. They're probably going to be around for a very long time. Same thing goes with food companies. Has the company been around since the 40s or the 50s? They're probably going to be doing very well in the future as well. Good history, good financial reach. Do they produce goods? They should. Do they produce products that are used worldwide? This is also a very big thing. If they're just making it within your country and have not exported, maybe stay away from them. If you want a really good, big company, look at stuff that's basically worldwide, that is a worldwide brand and a worldwide name. Good future growth projection, same exact thing for the future growth that I said earlier. Good should in many cases mean long lasting. Look for larger companies. Look for companies that look like they're going to be around for same exact thing I pretty much said before. Dividend yield has risen consistently, and this also ties into the passive income for you as well. You want to make sure that the companies you're getting into have a great dividend history. There is no future, projection of them lowering the dividend, especially if it's been relatively stable over the last couple of years. It has consistently risen and has not either gone up or slammed back down. That is a bad indication of things that are probably happening, as they're trying to maybe drag people into them with a higher dividend yield. That's exactly what it is. With a higher dividend yield to kind of get you into it. We have a higher dividend yield, therefore you should put your money into our company. These are lies. I think I covered just about everything. It's not really a lot. There are basically reasons why other major companies and other investors are into certain companies. It's because they look like they will be standing the test of time, as they have previously done so before. Once again, I can't name any companies. There are a lot though. It's not like it's only 10, so don't be worried that there's only like very few companies for you to be able to invest in. There are at least 100 across the wider spectrum for you to be able to put your money into in different sectors and different kind of places that you will receive a good return. And I make sure to mention this at the end of this video because of the current time that we are in right now. Just understand that a lot of people do think or are potentially anticipating that we could possibly, no one knows, have a stock market crash or a stock market recession or a stock market depression or a general economic depression in general because of everything that's been taking place during this year. So pay attention to where your money is going. Try to follow the markets. If you're looking to become a big time investor in the first place, it doesn't hurt for 30 minutes a day to watch some type of financial news and or, read a little bit as well, because it helps you learn more about the market and you become smarter as to where to put your money. I do hope you all enjoyed. I'm pretty sure I answered the question. If I did not, if you have any extra questions, ask me in the comment section below. I will take time to answer you. Thank you all once again for watching and listening. I think I said the first part already, and I will most certainly be talking to you all soon. See you.